Yo, what's up, everybody? It is Thursday, February 22nd. If you've been in the markets long, actually, you don't even have to really have been in the markets very long as an investor. If you're just observant, you will see that markets can be highly emotional. And that's because people are highly emotional. Someone once said, what is the difference between physics and economics as a science? And the response was, well, electrons don't have feelings. I thought that was pretty cool. Although you could argue with quantum mechanics, maybe they kind of do have feelings, because in quantum mechanics, the mere observation of an event could change it. But anyway, that's a whole separate subject. I'm not going to get into that. Not like I really understand it that deeply. But anyway, today was a classic example. And I would say that over the years, I've been an investor and a trader, exchange member, many, many years. And I've been dealing with people now through my service for like 8 years. And you really, stuff starts to stand out very, very clearly. And that really, what I'm alluding to is just human behavior. Today was a classic example. I've seen so many days like this, days that are just driven by extremely high levels of emotion. I've saw plenty of these on the downside too. I mean, just to step back and get some perspective, we can go back to October 2022 when the market was crashing because of Fed rate hikes. And I said, look, those rate hikes, we're going to reach an inflection point where the interest income transfers to the economy will offset the discounting effect of higher interest rates. That happened in October 2022. I said it at the time. And now we're at all-time record highs. And more recently, just last year, I said as long as Congress raises the debt ceiling, we're going to go to all-time record highs. Now, I've been saying there's going to be a tax strain in March and a bit, the big annual one in April. That's still out there. I thought last Thursday was the peak for the cycle, because that was the peak in fiscal flows, which that's correct. But clearly, it wasn't the peak in the cycle for the market, given what we saw today. And that's because of the Nvidia earnings, which I'll get into a little bit. But just think about this. Yesterday, those same investors sold Nvidia stock down to what, 660? Today it's 100 or 110 points higher because of an earnings report. And that earnings report didn't just affect Nvidia. I mean, it affected the whole entire stock market, rippling through to even foreign markets. The Japanese market made an all-time record high. By the way, that the last time it peaked was in 1989. But now it's at a new all-time record high. I can remember clearly people who I've had as subscribers or whatever, or people who, have come into contact with me. And now in retrospect, when I think about their behavior, it's just so clear as day. I mean, I have so many examples of this. In December of 2018, that was also a period when the Fed was raising interest rates. And the market was going down on that, like it does, because people panic and freak out. And I had a guy, I think the S&P was at like 2950 or something, and it dropped all the way to 23. Which was like a 20% correction. And I think I maybe gave a buy signal at, 28 or 27. And it went to 23. And this guy was so ticked off And he was so angry. And I said, man, calm down. Don't get so emotional. Don't overextend yourself. And here we are now, what, S&P way over 5,000. I had another guy. I forget when it was. Maybe it was like in 2018, 2019. Again, maybe 2020. I don't remember. We had some U.S. Steel stock. I mean, that was a value play. U.S. Steel stock price was trading for less than book value. What does that mean? Very simply, to describe what that means, if I said, I'll give you $1 for 50 cents, would you take it? Everybody would take it, And that's exactly what the valuation was for U.S. Steel at the time. But the stock was going down. That happens. Stocks go down. That's like the Warren Buffett. He always talks about Mr. Market, who's kind of crazy, kind of goofy, kind of irrational. Mr. Market comes knocking on your door with a basket full of stocks, and he says, here, you can have these stocks for this price. And then he comes back the next day and he said, you can have this same basket of stocks for this price, which is now like 20, 30, 50% cheaper. Nothing has changed. Same fundamentals, same anything. What do? Yeah, you take it at that point. So, and this guy, he got so angry and so upset because U.S. Steel, and I was saying, look, the stock is tremendously undervalued. There's no reason to sell it. You just have to have some patience. The stock went down, I don't know, it went down to maybe, I think it was like almost $5 a share. I think we might have been in at 17. But there was no reason to get out of it. Unless he overextended himself and was hit with margin calls and it was a forced liquidation. And now the stock is at 46. Yeah, it took time, just like it took time for the Japanese stock market to recover. You could say, well, what's the point? What was that, 35 years? But had you been dollar cost averaging it in that decline and buying, good, solid Japanese companies, the auto manufacturers, right? Maybe some of the top banks, I don't know. Over that period of time and accumulated, it's not like you would have just gotten your money back now. You would have been so way ahead of the game because the market for 35 years, it was offering you this tremendous, tremendous discount. And then it was creeping up the whole entire time. But I get a kick out of people saying, I was going to buy yesterday. You're going to buy yesterday? What happened to October 2022? What happened to all last year? You had a lot of opportunity to buy. So this is just, I don't know how else to talk about this. I mean, this is just investor behavior. This is just emotional behavior. We are human beings, and we are prone to emotional behavior. We are prone to emotional decision making. And the stock market reflects that. So like yesterday, they valued Nvidia at 660. It came out with good earnings. We're in this artificial intelligence kind of paradigm now, which a little bit reminds me of the Y2K, back in the 90s, where a lot of corporate investment went into retooling their systems, their IT systems for the change in the millennium. All right? And that was supposed to be like, when it turns to 2000, like airplanes are going to fall out of the sky. The electric grid is not going to work anymore. We won't have water. There was all kinds of hysteria about that when it switched over to 2000 because of the way IT systems had been programmed for, 100 years or whatever, 50, 60, 70 years. Nothing happened. But in the lead up to that, there was a tremendous amount of capital investment to upgrade systems. And that, it wasn't so much government spending at the time. It was really that Y2K spending from the private sector. Okay, actually the government was, you had that was the period of time when Clinton, he was running budget surpluses, or he was moving towards a budget surplus, which peaked out in 2001, which eventually sent the economy into a deep recession. So yesterday, not too many bulls. Today, a lot of bulls all over the place because a number came out in one stock. A number came out in one stock, Nvidia. And it was a good number, and it had good guidance, and it was like a total rush to get in there. Everybody wanted to get in. Yet, a year ago, not even a year ago, what was it, July, maybe July 2023? So, what's that, like 7 months ago? Something like that? About 7 months ago, you could have bought Nvidia below 200. I think it went down to like 160, 150. I was buying back then. I sent out, just the other day, I sent out that same email that I had sent out in July 2023, just showing people this is what I said at that time when it went down, and nobody wanted to touch that stock. Nobody wanted to touch that stock, and it was terrible, and it was horrible, and it was not meeting its targets on earnings, and the guidance was so-so, and Wall Street said, don't go near it, don't touch it with a 10-foot pole, and now it's almost 800. How do you explain that? Or a couple of years ago, same thing happened with JP Morgan. They sold that stock down to what, like 105, because they had an earnings report that Wall Street didn't like, and everybody freaked out, and everybody was selling, and banking crisis, and this and that, and the banks, and blah. It's 185 now. Same thing. I sent out a thing back then, I think I was buying the stock at 110. I was loading up all the way down. So if you look at a day, what has changed between yesterday and today? Nothing really, because the CEO of Nvidia, he knew what the company's earnings were. He knew what was going to be reported. Maybe the street didn't know, but was that a reason to sell it down? And was today a reason to buy it up by 110 points or something like that? You got to step back, and you got to have some perspective, because if you think that you can do these kind of things, one day you're bearish, the next day you're bullish, where do you think you're going to go with that? I mean, people sold yesterday. People sold in July 2023 below 200. They sold JP Morgan at 105. Like crazy. If you can't understand that this game is so laced with emotion, and if you're unable to extract yourself from that, I mean, if your mode of behavior is to be like everybody else, to flip back and forth between, one day you're bearish, one day you're bullish. I was going to buy yesterday, today I can't buy, or today what is that? What is that? So, I mean, we haven't had the tax train yet. Somebody said to me, well, I guess that tax train thing didn't work out, but we haven't had it yet. You know, last Thursday I said I think that's the top because of the peak in the flows cycle for this cycle, the peak in the flows for this cycle, which it still is. But we haven't had the tax train yet. That's coming up. Small one in March, the big one in April. I said it's going to be like a 400, could be more, 400 billion drain. And that'll go all the way into, I mean, the effect of that goes all the way into like the first or the second week in May. And then you got another one in June, tax train. So yeah, I mean, look, I'm not bothered by this kind of stuff. I've been in this game long enough to know, like, and I'm not saying that I'm anything special. I get excited. I wouldn't say despondent or anxious, but, you know, I try to get some distance. In other words, I'm not looking at it every 5 minutes. I try to get some distance. I try to keep myself focused on the big picture, the macro. If you're like, hey, Mike, it did this yesterday and now it's doing this today, and the whole thing, your thing doesn't work because it did this yesterday and now it's doing this today, like, I don't know what to tell you. I mean, I'm not the guy for you. Maybe there's something out there that you think is like the holy grail of what you're looking for. Here's another thing. I'm just going to finish up with this point. Learning is hard. Okay? Learning is hard. Learning takes discipline. Learning takes commitment. Learning takes study. Study involves repetition, you know, reading stuff over, thinking about things, trying to understand them deeply. If you're a person like, I wanna learn about this new thing. I don't care what it is, whether it's MMT, whether it's learning how to play tennis, whether it's learning how to, speak a foreign language. I don't care what it is. Like, I recently started boxing 6 months ago. I've never done boxing before. In the beginning, I was terrible. Really bad, to the point where a couple of times I was thinking, maybe this is not for me. But I stuck with it. That's my nature. I'm not a quitter. I stick with stuff. I'm stubborn in that regard. I mean, I'm a Taurus. Tauruses are notoriously stubborn. I stick with stuff. I stick with it to the end. I'm not a quitter. Now I've gotten pretty good at boxing. And I'm excited because the better you get in anything, the more you want to do it. Now it starts to become fun, all right? But in the beginning, if you're trying to learn something, right? If some spark goes off in your head and you're like, I want to learn that thing, whatever it is, MMT or investing or playing tennis or skiing or whatever, boxing. And then you start and it's like, oh man, this is hard. Yeah, it's hard because you don't know it. But if you say it's hard, it's not for me, you are so shortchanging yourself. I mean, how are you possibly going to grow as a human being, as a person? The first thing you come up against is some difficulty. At the very beginning, you don't even give yourself the leeway of saying, hey, I'm just venturing into this. So yeah, it's going to be a little bit difficult for me to understand at first, but I'm going to stick it out and I'm going to stay committed and I'm going to learn it. Instead, you go, wow, I never did this before, so it's hard, so I better quit. What is that? What is that? But that's what people do. This constant search for the easy thing that requires no effort, no commitment, no discipline. You just go into this new realm and boom, you're either an expert or this fantasy thing, this mysterious thing just takes care of you without you having to do a single thing. Like, is that the world you're living in? Is that the mentality that you carry around with you? And worse, you have the expectation that that is all you need just to find that thing. Well, I hate to break the news to you, but that thing, it doesn't exist. Okay? It doesn't exist. I mean, think about it. Learning is hard. But there's nothing wrong with hard. I always say, do what's hard. When it comes to a decision, always do what's hard. I'm not going to say that necessarily all the time, 100%, that's going to be the right decision. But you know how people have a hard time making decisions, including myself? Well, I bought into this idea, like if I don't know what to do, I do what's hard. And I told that to my kids too. Don't do what's easy. Easy brings you nothing. Do what is hard. Anyway, I think I'll end on that note today. And we'll see what happens, That's all I can tell you. We'll see what happens. And yeah, see you tomorrow. Bye.